Welcome to Business with Louis, the show where we dive into the world of entrepreneurship and explore the concepts that drive success. Today, we're talking about taxes, a fundamental aspect of business that can seem daunting, but is essential for any entrepreneur or small business owner to understand. So, what are taxes? Simply put, taxes are fees imposed by governments on individuals and businesses to fund public goods and services. In the world of business, taxes play a critical role in shaping financial decisions, influencing pricing strategies, and impacting cash flow. From income tax to employment tax and sales tax, understanding the different types of taxes is crucial for entrepreneurs to navigate the complex tax landscape. To grasp the core principles of taxes, let's take a step back and look at its historical background. The concept of taxation dates back to ancient civilizations, where governments would collect tributes or taxes from their citizens to fund public works and military campaigns. Over time, tax systems have evolved to become more sophisticated, with different countries implementing their own unique tax structures. One influential thinker who has shaped our understanding of taxes is Adam Smith, the father of modern economics. In his book, The Wealth of Nations, Smith argued that taxes should be fair, efficient, and minimal to avoid stifling economic growth. Another key concept is the Laffer curve, which suggests that as tax rates increase, tax revenue initially rises, but eventually declines as higher tax rates discourage economic activity. In recent years, our understanding of taxes has evolved to incorporate new concepts such as tax avoidance and tax evasion. With the rise of globalization, multinational corporations have found ways to minimize their tax liabilities by shifting profits to low-tax jurisdictions. However, this has led to increased scrutiny from governments and regulatory bodies, highlighting the need for transparency and fairness in tax systems. Let's look at some real-world examples to illustrate how taxes play out in practice. Take Amazon, for instance. The e-commerce giant has been criticized for its tax avoidance strategies, which have allowed it to pay minimal taxes on its massive profits. On the other hand, companies like Patagonia and Rye have taken a more proactive approach to taxes, using their tax savings to invest in environmental initiatives and community development projects. Another notable example is the tax reform implemented by the Trump administration in 2017. The Tax Cuts and Jobs Act reduced corporate tax rates from 35% to 21%, aiming to stimulate economic growth and increase competitiveness. However, critics argue that the reforms have largely benefited large corporations and wealthy individuals, widening the income gap and exacerbating social inequality. So, how can entrepreneurs apply taxes in their own ventures or careers? First and foremost, it's essential to understand the different types of taxes that apply to your business, such as income tax, employment tax, and sales tax. Keeping accurate financial records and consulting with a tax professional can help ensure compliance and optimize your tax strategy. For startups and small businesses, it's crucial to consider the impact of taxes on pricing strategies and cash flow. For instance, if you're selling products online, you may need to factor in sales tax rates, which can vary depending on the state or region. Additionally, entrepreneurs should be aware of tax credits and deductions available for research and development, renewable energy investments, or hiring employees from underrepresented groups. In terms of practical applications, businesses can use tax planning strategies such as income splitting, where owners can split their income with family members to reduce their overall tax liability. Another approach is to consider outsourcing certain functions or operations to low-tax jurisdictions, although this must be done carefully to avoid running afoul of tax authorities. Research findings have also shed light on the importance of taxes in shaping business decisions. A study by the National Bureau of Economic Research found that tax rates can significantly influence the location decisions of multinational corporations, with lower tax rates attracting more foreign investment. Another study published in the Journal of Accounting and Economics discovered that companies with more effective tax planning strategies tend to outperform their peers in terms of financial performance. In conclusion, taxes are a critical aspect of business that requires careful planning and strategic thinking. By understanding the core principles, staying updated on tax laws, and applying practical strategies, entrepreneurs can navigate the complex tax landscape with confidence and maximize their profits. Remember, taxes are not just a cost of doing business, but also an opportunity to contribute to the public good and support economic growth. Thanks for tuning in, and I look forward to exploring more business topics with you in future episodes. That's it for today's Business with Louis. Be sure to like, share, and subscribe, and remember, every great business starts with action. Make your next move count.